My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. What if we have a vaccine? I mean, that's what today's rally was all about, a virtual dry run, just in case Moderna is really able to produce its COVID vaccine en masse by the end of the year. Normally, vaccines take years to develop. The speed record is 4 years for mumps. But Moderna uses artificial intelligence, by the way, fueled by Amazon Web Services, to speed up the drug delivery and discovery process. Their COVID vaccines already going into phase 2 trials, and they're shooting for phase 3 this summer. That's incredible. That's much faster than anyone believed possible not that long ago. And if it works, if there are no serious side effects, that would change everything. Oh, how many ifs? There are mighty big ifs, too. But today's rally gives us a glimpse of what the future may look like if Moderna works, with the Dow up 211 points, S&P climbing 1.15%, and the Nasdaq falling 1.41%. Or at least that's the glass half full version of what happened today. This Panglossian worldview says you have to ignore tomorrow's hideous non-farm payroll number at 8:30 because that's in the rear view. If there's a vaccine around the corner, then you have to believe the economy's bottom and the future is much brighter than the past. We're also buoyed by a host of companies that said April and even the beginning of May have been surprisingly strong. Lyft, Uber, PayPal, and 2 companies here tonight, Etsy and Square. But let's not get ahead of ourselves. This market does have a tendency to bounce between unbridled optimism and total despair. No middle ground. The glass half full view, let's unpack it. First, now that we're gradually reopening the economy, it's possible that April marked the bottom in a host of different industries, from toys to waste disposal to aerospace. That's what the hard-headed CEO of Raytheon Technologies, Greg Hayes, told us this morning on Squawk on the Street. Of course, his argument is that it can't get any worse than April for aerospace because everybody stopped flying. Bad news for a company that makes components and services that services them for passenger planes. Thank heavens they have a powerful defense business. Second, we're getting a partial return to normalcy. Some restaurants are open, though admittedly with very, very few tables, and certainly maybe not enough for them to ultimately survive. But with government covering 8 weeks of payroll, it makes sense to give it a shot. Wynn Resorts, by the way, has a very thoughtful plan to reopen. And I got to tell you, it's aided by the experts from Georgetown and Johns Hopkins. They're not fooling around. This morning, I got an email headed, "That's right, sports are back." There's a big UFC 249 bout on May 9th between 2, no doubt, fantastic fighters. And it's being broadcast this Saturday in front of a fanless audience. It looks like at least some of pro sports empresarios have figured out how to do business in the COVID era. Can basketball, baseball, football be far behind? Maybe someone's figured how to do team sports for real. I don't know. You Abbott test them at halftime. And that's why that might explain why Disney's rallied today after a suboptimal quarter, by the way. Big deal for them if ESPN has something to broadcast again other than Michael Jordan. Third, we know that reopening the economy right now is incredibly risky. There's a very real chance that we get a major spike in new cases. But maybe all the physical distancing prevents that from happening. At the end of the day, I think the government has less control over this stuff than we'd like to believe. If people feel safe, the economy will come roaring back. If they don't feel safe, then they'll keep staying at home even after we come out of quarantine. But the glass half full crowd, well, they believe we can lift the lockdowns and go back to normal. Fourth, oil's made a comeback. Notice that after briefly collapsing to a negative 37. I don't think we'll see that again last month. Oil futures are now back to $23. Of course, that's still nowhere near high enough to prevent a wave of bankruptcies in the patch. But many hedge funds view oil as the ultimate barometer of economic health, so they see this rally as a sign that maybe the reopening's working. Fifth, we don't have a vaccine yet. But you know what? We do have a drug that can get severe COVID patients, some of them at least, out of the hospital a few days earlier, Gilead's remdesivir. Earlier this week, Regeneron announced that it's tantalizingly close to a monoclonal antibody that can help fight the virus once you catch it. Hey, maybe it can work side by side with remdesivir, part of a cocktail. I mean, that's how we got HIV under control, and it's how we cured Hep C. Remember, HIV was Dr. Fauci. Hey, those who are knocking Dr. Fauci, Come here. I got something for you. Yeah, that's your head. Anyway, there's justifiable hope away from the vaccine, I guess. 6, we have companies that are thriving in this new world. Companies like ServiceNow. You see that thing at Salesforce.com. Okta, that's a Cramer family fave. Coupa, Ring Central. How can I help you? And a ton of other companies I have brought to you again and again and again. These cloud-based software plays, which we have been behind from the beginning. Well, their stay-at-home economy, they figured that out. Now they're figuring out how to get it so your business is open. And that's why their stocks have been on fire, including today's monster 40% run in Twilio, the cloud-based messaging software play run by Jeff Lawson, so ably representing his company in Closing Bell. Finally, the action in the stock market suggests that we're seeing some real economic activity. Hey, maybe it's the stimulus checks, perhaps because of payroll protection. Unemployment's going up. What you get for being unemployed. Whatever, it's happening and it's beginning to work. We see it in stocks. Home Depot's rallied for days on end, so is Lowe's. Stanley Black & Decker's flying. Perhaps there might be even a gardening season this year, like Christmas for Home Depot or Lowe's, although it's going to be so crowded, I'm going from seed. I'm planting seeds this year. The home builders seem to have bottomed, too. That's a big slug of the economy. Remember, it punches above its weight. You can construct a pretty positive narrative out of these 7 points. But there's one little problem. We don't know how much of this stuff is going to happen. It's entirely possible Moderna's vaccine doesn't work. Maybe it's not as effective after a few weeks. Maybe there are some serious side effects. There are good reasons why we've never gotten a vaccine to the market in less than 4 years. So many things go wrong when you inject a healthy person with what's basically a tiny dose of disease. Maybe we're reopening the economy too soon. We've seen other countries pull this off, but they all had enough testing and contact tracing so they could rapidly stamp out any new outbreaks. They embrace face masks, something many people in this country seem to find repulsive or just too inconvenient, including the President of the United States. When you exclude the New York metro area, we haven't really bent the curve in the country. New cases are still accelerating. Thousands of people die every day. Seems ill-advised to reopen before we've gotten the pandemic under control in some states. We can't just pretend this thing will go away. I do favor reopening, but in the states where it's going on still higher, I don't know. Sounds ill-advised. And the strength of the stock market might have less to do with the fundamentals and more to do with a lack of viable alternatives. Plus, bullish, growth-oriented money managers have been inundated with cash after a fabulous month of April. As for me, I am more optimistic, too, but I don't want to get too wild-eyed. I like to keep some cash around now for the inevitable disappointment. We don't know how this situation will play out, so we should own stocks that can thrive during a recession. Yeah, Cramer's Mad Money Index, but also do fine once we claw our way out of the abyss. I don't want anything that's getting obliterated by the virus. Think the airlines. I don't want to mess with companies that have challenged balance sheets and suspect dividends. I'm willing to make an exception for Disney, even though it did suspend its dividend for the next quarter, they do a half-year dividend because it has such an iconic brand. But everything else in the COVID blast radius, forget about it. Don't touch the hotels. If you have them and they're running, sell them. Don't touch the banks. If you have them, they're running, sell them. But the bottom line, I get this rally. It's based on hope. And while hope should never be part of the equation, the truth is there are some real positives now occurring. The trick right now, we need to acknowledge that good things can still happen without going into denial about all the bad things that are currently happening. It's a tough tightrope to walk, but I'll get you where you need to go. Hey, let's go to Harish in Illinois. Harish.
Hi, Jim. Booyakasha.
Good to have you.
Thank you. So here's my question. I bought Nike at around 89 last year. It had a decent day today, but I'm a little wary of its future in a post-COVID world. Do I sell and maybe buy one of the stocks on your now famous Mad COVID-19?
No, I don't want you to sell Nike. Nike's really good, and they're having a good quarter. And even I don't care where you bought it. I care where it's going to, and I think Nike goes back to its old high. So please don't sell that one. All right. The prospect that Moderna's vaccine, set to begin a phase 2 trial, could be effective in fighting COVID-19 ignited a spark of hope and consequently today's rally. Despite its promise, I want you to continue to stick with stocks that can thrive in a recession, but also going out of one. On Mad Tonight, by Switzerland with Norwegian Cruise Lines. How is the company navigating the uncertain waters during a pandemic and a big fundraise? Then I'll tell you why Beyond Meat is able to keep winning in its market. And Etsy sales doubled in April thanks to homemade masks. But the stock went down a little bit today, only after it's hitting all-time high. I'm talking with the CEO after earnings. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.